Most people think taxes are just a necessary part of life. You work, you earn, the government takes its share. Simple, right? But what if I told you that the rich have learned to legally use the tax system to their advantage? In chapter 4 of Rich Dad, Poor Dad, Robert Kiyosaki reveals how understanding of taxes and corporations is one of the most powerful wealth building tools. Yet, it's something most people never learn. Today, I'm breaking down how taxes were designed to control the masses and how the wealthy legally avoid paying more than they have to, using the very system the rest of us struggle to understand. For those new here, I'm Muzaffar Teja, qualified accountant, investment banker, and your guide to decoding the game of wealth. On this channel, we don't just talk about money, we explore the strategies that actually move the needle. From personal finance to investing to timeless lessons from world's most powerful financial books. If that sounds like your thing, hit that subscribe button. We drop game-changing content every week. Kiyosaki opened this chapter by asking something most people never question. Where did the income tax actually come from? And here's the surprising answer. Taxes were originally sold to the public as a way to punish the rich. That's right. In early 20th century, when income tax became law in countries like US and UK, the public supported it because they believed it would force wealthy elite to pay their fair share. But here's what happened instead. The middle class became the primary taxpayer. The rich, who understood how tax law worked, used corporations, trusts, and legal structure to avoid most taxes. Legally. Kiyosaki says, every time people voted for more taxes thinking it would hurt the rich, it actually hurt the very people voting for it. That's the irony of tax policy. It was marketed as an equalizer, but it became a wealth extractor for the masses. In this chapter, Rich Dad tells young Robert, if you want to be rich, you need to understand how corporations and taxes work. He explained that rich don't evade taxes, they learn how to legally minimize them. Compare these two scenarios. An employee earns income, pays taxes on it, and then spends the leftover. Corporations earns income, spends first on salaries, benefits, cars, travels, and then pays taxes on the leftover. See the difference? Rich people don't get rich by working harder. They get rich by understanding the rules of the game. And one of the biggest rules, the tax code rewards those who provide value through assets, jobs, and investments. Kiyosaki introduces a game-changing concept here. A corporation is a legal entity that protects your assets and help you reduce taxes. Let's break that down. A corporation isn't just for big companies. It can be a small business, a consulting firm, a real estate holding company, or even a brand you are building online. What it gives you is liability protection, so you are not personally responsible for business debts. Tax benefits. You can deduct legitimate business expenses before paying taxes. Flexibility. You can reinvest earnings and scale wealth faster. Rich Dad explains that forming a corporation is like building a financial shield around your income and your assets. Meanwhile, most people earn a salary and pay taxes before they even see their paychecks. Let me show you how this plays out in real life. Meet Sarah. She is a graphic designer. As an employee, she earns £60,000 a year. After taxes, she is left with roughly £43,000. But let's say she starts a freelancing and creates a limited company. She now pays herself a small salary, writes off her home office, laptop, internet, business lunches, pays tax only on the profit after expenses. Her actual tax bill, lower. Her flexibility, greater. Her wealth building options, vastly improved. This is what Kiyosaki means when he says, the rich plays the money game with knowledge, the poor plays with emotions and hope. This chapter has sparked a lot of conversation among financial educators and critics. In Tax-Free Wealth by Tom Wheelwright, CPA and a tax strategist for Robert Kiyosaki, he expands on this idea that the tax law is a series of incentives for investors and business owners. If you understand what government wants done and you do it, you will be rewarded by the lower taxes. Wheelwright breaks down how government offers tax breaks for creating jobs, building housing, investing in infrastructure, going green like renewable energy, electric vehicles. That's why rich often pay lower effective tax rate. They are playing by the rule the government created for economic growth. Now, some critics argue that Kiyosaki oversimplifies this. Economist and author Helene Olin wrote in Pound Foolish that Kiyosaki's advice implies anyone can just start a company and avoid taxes, when in reality, many small business owners struggle to even stay afloat, let alone minimize tax code. Fair point. But Kiyosaki never claims it's easy. He claims it's possible and essential if you want to play the wealth game smart. And honestly, having spent years in finance world, I agree. The people who win are the ones who take time to learn how money works, not the one who blindly follow the system. Kiyosaki explains that the middle class are the most heavily taxed group. Why? Because they earn salaries and salaries are taxed at the highest rates. The rich, on the other hand, earn income through capital gains, business income, real estate appreciation, dividends and interest. These forms of incomes are taxed lower, often deferred or even offset by losses. Here is an example. Two people earn £100,000. One earns it as a salaried employee. They might pay £30,000 plus in taxes. The other earns it through a real estate business. After depreciation and expenses, their taxable income might be just £20,000 and they pay taxes accordingly. Same income, very different outcome. So what does this mean for you? You don't need to be a millionaire or CEO to start using these lessons. You can start a side hustle or online brand and form a simple LLC or a limited company. Learn the basics of tax deductions and track every business related expense. Invest in assets that offer tax advantages like real estate or retirement accounts. And most importantly, commit to understanding the system. The people who win the money game aren't always the smartest. They are just the ones who took time to learn the rules. Underneath all the technical stuff about taxes, corporations, this chapter is really about control. Are you in control of your finances, or are your finances controlling you? Rich Dad teaches that wealthy don't leave their money up to government, the school system, or their employer. They take responsibility, they get educated, they structure their lives to protect their income and grow it strategically. And that's the deeper lesson here. Financial education isn't just about making more, it's about keeping more. Let's break this chapter down into 4 practical takeaways. Learn how the tax system works. You don't need to be a tax expert, but you need to understand how income is taxed and how corporations work. Start thinking like a business owner. Even if you have a job, start something on the side that you own. Use legal structure to protect and grow your wealth. Corporations, trusts, and real estate entities aren't just for rich, they are tools available to you. Educate yourself. The rich get richer because they invest in knowledge, books, courses, mentors. It's all part of the game. So, is the tax system rigged? In a way, yes, but not against you, just against those who don't understand it. Chapter 4 of Rich Dad Poor Dad teaches us that if you want to win at wealth, you have to do more than work hard. You have to learn the rules. Let me know in the comments what's one tax strategy or business structure you want to learn more about this year. If this video gave you value, give it a like, share it with a friend who needs this knowledge, and subscribe. We've got more money truth coming every week. Up next in chapter 5, the rich invent money, and it's all about opportunity and creativity in finance. Can't wait to break it down with you. I'm Muzaffar Teja. See you in the next one.